Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news that the size of the Chinese economy may be smaller than we thought. But first, in the US, data released by the Fed this morning shows a surprising fall in household net worth in the December quarter of 2018. A volatile stock market may have trimmed levels more than expected. Also, the European Central Bank has unexpectedly changed tack on its tightening plan overnight, pushing out the timing of its first post-crisis rate hike until 2020 at the earliest. It is now offering banks a new round of cheap stimulus loans to help revive the slowing Eurozone economy that they say is lasting longer and is deeper than previously thought. Speaking of stimulus, Beijing continues to be concerned with the level of local authority debt levels. Some local governments have continued to illegally borrow money off the books through local government financing vehicles. This hidden local government debt amounted to around 9 trillion at the end of 2018, and the interest payments alone could reach more than 130 billion in 2019. Worse, a new study claims that China has significantly overstated the size of its economy and its growth rate. The forensic review suggests the current nominal size of the Chinese economy is about 18% lower than officially claimed at the end of 2018. Wall Street is 0.5% lower so far today, following a similar fall in Europe of 0.6% overnight, as risk aversion takes hold on the poor data releases and the European Central Bank's change of heart. Yesterday, markets fell heavily in Hong Kong by 0.9% and Tokyo 0.7%, although they closed even in Shanghai at up 0.1%. Air cargo volumes began 2019 on a weak note, with volumes 1.8% lower than they were in January last year. This is the third consecutive month of negative year-on-year growth and is the slowest pace in 3 years. Going the other way is passenger air travel. This rose 6.5% in January compared with the same month a year ago. This was the fastest growth in 6 months. While gold is down $2 to $1,285 an ounce, and US oil prices are firmer today at $56.50 a barrel, while the benchmark is over $65.50 a barrel. The Kiwi dollar is at 67.7 US cents and unchanged from this time yesterday, while on the cross rates we are a little changed at 96.3 Australian cents, and the euro we are firmer at 60.4 euro cents. That puts the TWI 5 at 72.6. I'm Steve Forbes and that was 90 at 9, brought to you by interest.co.nz.